Question 1. Which of the following is a primary difference between first-party and third-party coverage in cyber insurance? A. First-party coverage protects against claims from external parties, while third-party coverage protects the policyholder's own assets. B. First-party coverage typically covers data breaches and ransomware attacks, while third-party coverage focuses on liability to external parties. C. Third-party coverage covers lost data, and first-party coverage covers employee errors. D. Third-party coverage is for hardware damages, while first-party coverage applies only to software issues. Answer. B. Explanation. First-party coverage in cyber insurance typically protects the insured against losses they directly suffer due to cyber events such as data breaches, ransomware, or business interruption. Examples of first-party claims include damage to the policyholder's own data and systems. Third-party coverage, on the other hand, provides liability protection in case the policyholder's cybersecurity failures affect external parties, such as customers or partners. It includes liabilities arising from privacy breaches or failure to protect the data of others. The differences are fundamental in understanding who the coverage is designed to protect. The insured, first party versus third parties, third party. Question 2. Mr. Thompson is the Chief Information Officer at a financial services firm in Oregon. The firm recently suffered a data breach resulting in unauthorized access to clients' personal financial data. The breach was traced to an employee who clicked on a phishing email. Mr. Thompson is reviewing the firm's cyber insurance policy and needs to determine whether the incident is covered. Which of the following would most likely be a determining factor in whether the claim is covered? A. Whether the email was identified as a phishing attempt before it was clicked. B. Whether the firm complied with its incident response plan during the breach. C. Whether the firm's policy includes coverage for employee errors under its network security liability. D. Whether the breach occurred due to an external malicious attack rather than internal negligence. Answer. C. Explanation. In the scenario provided, the determining factor for coverage would typically be whether the firm's policy includes coverage for incidents like employee errors, which are common causes of data breaches. Network security liability often covers damages caused by internal threats such as an employee clicking on a phishing email which led to the breach. The other options, they B, D, are secondary to the coverage terms outlined in the policy, while incident response plans B and identification of phishing emails A are crucial for minimizing damage. They do not determine coverage unless the policy explicitly requires compliance as part of the coverage terms. The policy wording regarding employee errors, C, is the key focus. Question 3. Which of the following best describes the role of encryption in mitigating cyber insurance risks? A. Encryption is a form of cybersecurity tool covered under a cyber insurance policy to prevent third-party claims. B. Encryption helps mitigate cyber insurance risks by protecting sensitive data, thereby reducing the likelihood of data breaches that could trigger claims. C. Encryption only applies to the protection of business emails and is not relevant to other forms of data storage. D. Encryption is only useful for first-party coverage and has no impact on third-party liability claims. Answer. B. Explanation. Encryption is a crucial cybersecurity measure that helps to protect sensitive data, making it less vulnerable to unauthorized access during a data breach or other cyber event. By ensuring that data is unreadable without the proper decryption keys, encryption reduces the likelihood of successful attacks that expose personal, financial, or business information. This in turn lowers the risk of claims being filed under both first-party and third-party coverage in a cyber insurance policy. For example, if encrypted data is breached, it is significantly harder for attackers to exploit the information, which may prevent potential claims or reduce the severity of claims. Therefore, encryption is an essential risk mitigation tool for both policyholders and insurance providers. Question 4. Which of the following is an example of a common exclusion in most cyber insurance policies related to data breaches? A. Losses due to an employee's personal negligence in handling company data. B. Losses resulting from a cyber event caused by a natural disaster such as a flood. C. Losses due to failure in complying with the company's data privacy policies. D. Losses arising from the failure to secure data stored in cloud environments. Answer. C. Explanation. Exclusions in cyber insurance policies often focus on situations where the policyholder has failed to meet specific standards or compliance requirements. In the case of data breaches, many policies exclude losses that arise due to the policyholder's failure to adhere to internal data privacy policies, industry standards, or regulatory requirements. This might include non-compliance with regulations such as GDPR or the Oregon Consumer Privacy Act (OCPA), while negligence, or cloud storage vulnerabilities could lead to claims. Exclusions are typically focused on lapses in compliance or policyholder responsibility. Natural disasters generally fall outside the scope of cyber insurance coverage and may be covered by other types of property insurance. Question 5. Which of the following cybersecurity frameworks is most commonly used in cyber insurance underwriting to assess a company's security posture? A. ISO 27001. B. Payment Card Industry Data Security Standard (ECESS). C. NIST Cybersecurity Framework. D. General Data Protection Regulation (E). Answer: C. Explanation. The NIST Cybersecurity Framework is widely used by insurers in cyber insurance underwriting to assess a company's overall security posture. It is a comprehensive set of standards and guidelines that help organizations manage cybersecurity risks. This framework helps insurers understand the robustness of a company's cybersecurity practices, including risk identification, protection, detection, response, and recovery processes. While ISO 27001A and PCI DSS B are also important, they are more specific to certain industries or focus areas. E.g., ISO 27001 for information security management systems, PCI DSS for payment card data security. GDPR D is a regulation rather than a framework and focuses on data privacy and protection. Question 6. Mr. Adams is the chief risk officer of a retail company in Oregon. The company was targeted by a ransomware attack which locked its files and demanded a ransom payment. Mr. Adams is reviewing the company's cyber insurance policy. Which of the following is most likely to determine whether the ransom payment is covered under the company's cyber insurance policy? A. Whether the ransom payment was made in cryptocurrency or traditional currency. B. Whether the company had previously experienced ransomware attacks. C. Whether the company's cyber insurance policy specifically includes coverage for cyber extortion or ransomware attacks. D. Whether the company has an external incident response team in place. Answer: C. Explanation. Cyber insurance policies typically cover the cost of cyber extortion and ransomware attacks, but this is only true if the policy specifically includes such coverage. Cyber extortion coverage generally includes ransom payments as well as costs associated with mitigating the attack. G. Legal fees, IT response costs. The type of currency used for payment A is usually not relevant to the coverage decision. A history of previous ransomware attacks B is not a determining factor unless the policy includes exclusions related to repeated incidents. While having an incident response team D may help mitigate damage, it does not directly affect whether the ransom payment is covered under the policy. Question 7. Which of the following is the most important step in the incident response process after data breach has been identified? A. Immediately making the ransom payment to the attacker. B. Conducting an internal investigation to determine the scope of the breach. C. Discontinuing all business operations to prevent further damage. D. Notifying affected parties before conducting any internal analysis. Answer: B. Explanation. The most important initial step after identifying a data breach is conducting an internal investigation to assess the scope of the breach. This includes determining what data has been compromised, how the breach occurred, and the potential impact on the organization. A thorough investigation helps ensure that the proper response actions are taken, including notifying relevant parties and implementing damage control. Paying a ransom or ceasing operations C should not be the immediate focus, while notifying affected parties D is required. It should be done after thorough understanding of the situation has been established through internal analysis. Question 8. Which of the following represents a typical limitation or exclusion in a cyber insurance policy related to third-party liability coverage? A. Coverage for damages arising from the failure to meet regulatory requirements. B. Coverage for lawsuits due to business interruption caused by a cyber attack. C. Coverage for claims related to the privacy violations of third-party clients. D. Coverage for third-party damages due to physical theft of digital assets. Answer A. Explanation. Most cyber insurance policies exclude coverage for damages arising from the policyholder's failure to meet regulatory requirements. For example, if a company does not comply with data privacy laws like the Oregon Consumer Privacy Act (OCPA) or GDPR, and a third party suffers damages due to this non-compliance, the insurance policy may not cover the associated liabilities. This is a critical exclusion since failure to adhere to compliance requirements can significantly affect the outcome of a claim. Business interruption, B. Privacy violation claims, C. And physical theft of assets, D. Can be covered under specific policy terms, though exclusions may apply in certain contexts. Question 9. What role does artificial intelligence (AI) play in cyber insurance underwriting? AI helps insurers automate claims processing and provides real-time updates to policyholders. B. AI determines the premium rates based on industry trends and risk models only. C. AI assists in identifying cyber risks and vulnerabilities by analyzing vast amounts of data. D. AI is only used to develop new cyber insurance products but does not influence underwriting decisions. Answer: C. Explanation. Artificial intelligence (AI) plays a significant role in cyber insurance underwriting by helping insurers identify cyber risks and vulnerabilities. By analyzing large datasets including historical incident reports, security practices, and threat intelligence, AI can predict potential risks and evaluate the likelihood of a cyber incident. This enables insurers to better assess a company's risk profile and make more accurate underwriting decisions. While AI can help automate claims processing, its primary use in underwriting is in risk identification and assessment. C. AI does not solely determine premium rates. B. Or develop new products. D. Although it may influence product design indirectly. Question 10. In the context of cyber insurance, which of the following is the main purpose of business interruption coverage? A. To reimburse the policyholder for physical damages to hardware caused by a cyber attack. B. To cover losses resulting from a disruption in the company's ability to conduct normal business operations due to a cyber incident. C. To provide compensation for legal costs related to privacy violations. D. To reimburse the policyholder for costs incurred in restoring data after a breach. Answer: B. Explanation. Business interruption coverage in cyber insurance policies is designed to cover losses that result from a disruption in business operations due to a cyber event, such as a ransomware attack or system outage. This type of coverage compensates for lost revenue and additional expenses incurred while the company works to recover and resume operations. It does not typically cover physical damage to hardware, illegal costs related to privacy violations, C. Or data recovery expenses, D. Which are addressed through other coverage types such as data recovery and crisis management coverage. Question 11. Which of the following types of data breach is typically excluded from cyber insurance policies? A. Breach of personal information due to a malicious cyber attack. B. Breach of personal information due to employee negligence. C. Breach of personal information caused by an unauthorized third-party vendor. D. Breach of personal information resulting from an employee intentionally violating company policy. Answer: D. Explanation. Cyber insurance policies often exclude coverage for breaches caused by employee misconduct or intentional actions that violate company policies. Intentional violations by employees can lead to exclusions in coverage, especially if the breach was avoidable. Breaches caused by external malicious actors, A. Employee negligence, B. Or unauthorized third-party vendors, C. Are typically covered under the policy, though there may be specific conditions that apply. Question 12. Which of the following best describes a no-fault cyber insurance policy provision? A. The policy covers all incidents regardless of who caused the cyber event. B. The policy covers only incidents caused by external attackers. C. The policy excludes coverage if the company was found to be negligent in its cybersecurity measures. D. The policy requires the policyholder to prove negligence before a claim can be filed. Answer A. Explanation. The no-fault provision in a cyber insurance policy ensures that coverage applies regardless of who caused the cyber event, whether the breach was the result of an external attacker, employee negligence, or system vulnerability. The policyholder is still eligible for compensation. This provision simplifies the claims process by not requiring the policyholder to prove fault, such as negligence or intentional misconduct. Question 13. What is the primary purpose of third-party cyber liability coverage in a cyber insurance policy? A. To cover the costs of cyber extortion payments to attackers. B. To cover damages and legal fees for third-party claims resulting from the policyholder's cyber event. C. To cover the costs of restoring data after a cyber incident. D. To cover the policyholder's own business interruption losses during a cyber attack. Answer: B. Explanation. Third-party cyber liability coverage is designed to protect the policyholder from legal actions and damages that may arise when a cyber event affects an external party such as clients, customers, or business partners. This type of coverage addresses legal fees, settlements, and compensation claims for any damages caused by the insured organization's cyber incident. It does not cover extortion payments, A, data restoration, C, or the policyholder's own business interruption losses, D. Question 14. Which of the following is the most effective way for a company to lower its cyber insurance premiums? A. By allowing insurers to access company data for real-time monitoring. B. By providing the insurer with evidence of strong cybersecurity practices in compliance with industry standards. C. By purchasing a broader policy that covers more types of cyber threats. D. By reducing the number of employees with access to sensitive data. Answer. B. Explanation. A company can lower its cyber insurance premiums by demonstrating that it has implemented strong cybersecurity practices and is compliant with industry standards. Insurers may offer discounts to companies that adopt robust security measures such as multi-factor authentication, regular vulnerability testing, and compliance with frameworks like NIST or ISO 27001. While restricting access to sensitive data, D, may be beneficial, the most effective method for lowering premiums is proactively improving the overall security posture. B. Question 15. Which of the following is a common feature of a cyber insurance policy's breach response coverage? A. Coverage for physical property damage caused by a cyber attack. B. Coverage for the costs associated with investigating and managing a data breach incident. C. Coverage for employee training on cybersecurity best practices. D. Coverage for legal fees associated with defending against a privacy class action lawsuit. Answer. B. Explanation. Breach response coverage in a cyber insurance policy typically covers the costs associated with investigating, managing, and mitigating a data breach incident. This includes expenses like forensic analysis, crisis management services, public relations efforts, and legal support. Coverage for physical property damage, A, and employee training, C, are typically excluded, while legal fees for defending against lawsuits, D, may be covered under other parts of the policy. Question 16. Which of the following is true about coverage for cyber extortion under most cyber insurance policies? A. Cyber extortion coverage is automatically included in all cyber insurance policies without additional premiums. B. Cyber extortion coverage only applies if the extortion attempt involves financial loss to the policyholder. C. Cyber extortion coverage typically covers ransom payments made to attackers. D. Cyber extortion coverage is limited to cases involving physical threats to personnel. Answer. C. Explanation. Cyber extortion coverage typically applies to situations where an organization is threatened with a cyber attack, such as a ransomware attack, and a ransom is demanded. This coverage can reimburse the policyholder for the cost of the ransom payment as well as associated costs such as negotiations, legal fees, and public relations efforts. It is not limited to financial loss, B, or physical threats to personnel, D, though some policies may have specific exclusions or conditions. Question 17. A company's cyber insurance policy has a waiting period clause for business interruption coverage. What does this clause mean? A. Coverage will only apply if the business interruption lasts for more than 24 hours. B. Coverage is only triggered after the policyholder files a claim for damages. C. The business interruption must last for at least 72 hours before any coverage applies. D. Coverage is available only if the business interruption is directly caused by a cyber attack. Answer. C. Explanation. A waiting period clause in a cyber insurance policy specifies the minimum amount of time that must elapse before business interruption coverage is activated. Typically, this waiting period is 72 hours, meaning the business must experience an interruption lasting this long before the insurer begins providing compensation for lost revenue and additional expenses. The clause is designed to prevent claims for minor or temporary disruptions. Question 18. Which of the following is NOT typically covered under cyber insurance policies? Data breach coverage. A. Costs for notifying affected individuals about the breach. B. Costs for providing identity theft protection to affected individuals. C. Costs for restoring lost or corrupted data. D. Costs for investigating the cause of the breach. Answer. C. Explanation. Data breach coverage typically covers the costs associated with notifying affected individuals, providing credit monitoring or identity theft protection, and investigating the breach's cause. However, data restoration costs are usually covered under separate parts of a cyber insurance policy, such as business interruption or data recovery coverage. Restoring lost or corrupted data is not typically included under the basic data breach coverage. Question 19. Which of the following is the primary benefit of having a sublimit for coverage of social engineering fraud in a cyber insurance policy? A. It provides unlimited coverage for all types of social engineering fraud. B. It limits the amount the insurer will pay for specific types of fraud, such as phishing attacks. C. It ensures that claims for fraud will be paid without any deductibles. D. It allows the insurer to cover only social engineering fraud that affects third parties. Answer B. Explanation. The sublimit ECA cyber insurance policy is a cap on coverage for certain types of risks or losses, such as social engineering fraud. G. Phishing business email compromise. The sublimit sets a maximum payout for these incidents, which may be lower than the overall policy limit. It is meant to balance risk by limiting exposure to high frequency but low cost claims related to social engineering fraud. Sublimits do not provide unlimited coverage. They eliminate deductibles. C. Or restrict coverage to third parties. D. Question 20. Which of the following is the best way for a company to ensure compliance with its cyber insurance policy's risk management requirements? A. Relying on the insurer to manage the company's cybersecurity posture. B. Regularly updating security systems and demonstrating compliance with industry standards. C. Avoiding the use of any third-party vendors in cybersecurity operations. D. Limiting cyber insurance coverage to the bare minimum required. Answer B. Explanation. To ensure compliance with a cyber insurance policy's risk management requirements, a company should regularly update its security systems and adhere to industry standards such as NIST ISO 27001 or GDPR. Demonstrating a proactive cybersecurity posture helps mitigate risks and can lead to lower premiums or better coverage terms. Relying solely on the insurer, A. Avoiding third-party vendors. C. Or minimizing coverage. D. Are not effective strategies for managing risk or ensuring compliance with the policy's terms. Question 21. What is a cyber incident as defined in most cyber insurance policies? A. Any act of cybercrime affecting an individual's personal data. B. A security breach or attack involving an organization's digital infrastructure or data. C. Any action involving a malicious third party on social media platforms. D. A physical attack that damages computer hardware. Answer B. Explanation. A cyber incident is typically defined in cyber insurance policies as any breach, attack, or security event that compromises an organization's digital infrastructure, data, or operations. This includes ransomware attacks, hacking incidents, data breaches, and other forms of cyber attacks that affect the organization's networks and data. Question 22. Which of the following is typically covered under Network Security Liability ECA cyber insurance policy? A. Physical damage to hardware due to cyber attack. B. Costs associated with responding to data breach involving customer information. C. Costs for restoring lost or damaged company data after a breach. D. Legal costs for defending against claims resulting from a breach of network security. Answer D. Explanation. Network security liability coverage is designed to protect against legal claims arising from security failures, such as a breach of data or unauthorized access. This coverage would cover the costs of defending against lawsuits or claims resulting from a breach of network security. D. It does not typically cover physical damage to hardware. A. Or the restoration of company data. C. Though these could fall under different parts of the policy. Question 23. What is the purpose of a cyber insurance policy's retroactive date provision? A. It determines the latest date that a claim can be made for a cyber event. B. It establishes the minimum time period the company must have maintained cybersecurity measures. C. It indicates the earliest date a cyber event could have occurred for coverage to apply. D. It dictates when coverage for a cyber incident will end after the event occurs. Answer C. Explanation. The retroactive date provision in a cyber insurance policy specifies the earliest date that a covered cyber incident can occur in order to be eligible for coverage. If the event happens before this date, it will not be covered regardless of when the policy is purchased. This provision helps ensure that coverage applies only to incidents that occur after a specific point in time. Question 24. Which of the following best describes the waiting period clause in a business interruption coverage section of a cyber insurance policy? A. It establishes a grace period before the policyholder must notify the insurer of a cyber incident. B. It specifies a time frame after which the business interruption benefits will begin. C. It indicates a time frame within which the business must recover to qualify for compensation. D. It requires the insurer to investigate the cause of business interruption before coverage is activated. Answer B. Explanation. A waiting period or cause in business interruption coverage defines a time frame, often 72 hours, before benefits for lost revenue or additional expenses are paid out. This clause ensures that coverage only applies if the interruption lasts beyond a certain threshold. The waiting period prevents insurance claims for brief disruptions and is designed to limit minor claims. Question 25. What is a common exclusion in most cyber insurance policies regarding data loss? A. Loss of data caused by external attacks such as hacking or ransomware. B. Loss of data due to system failure or malfunction. C. Loss of data resulting from employee negligence. D. Loss of data due to cyber extortion. Answer B. Explanation. Most cyber insurance policies typically exclude coverage for data loss caused by system failure or malfunction, B, as this is considered part of regular business operations. However, losses due to hacking, ransomware, or employee negligence and C are usually covered. Cyber extortion, D, may also be covered depending on the specific terms of the policy. Question 26. Which of the following actions would typically be covered under a cyber insurance policy's cyber extortion coverage? A. Payment of a ransom to cyber criminals in a ransomware attack. B. Legal fees associated with defending against a lawsuit due to a data breach. C. Costs to restore lost data caused by a cyber attack. D. Costs to repair or replace damaged hardware from a cyber attack. Answer. An explanation. Cyber extortion coverage generally covers the payment of a ransom to cyber criminals, particularly in cases involving ransomware attacks. This coverage is designed to help policyholders manage the financial burden of paying a ransom to recover data or prevent further damage. Legal fees, B, data restoration, C, and hardware repairs, D, typically fall under other parts of the cyber insurance policy. Question 27. Which of the following could potentially trigger a prior act's exclusion in a cyber insurance policy? A. A data breach that occurred before the policy's inception. B. A data breach caused by a third-party vendor. C. A cyber attack that occurs after the policy's retroactive date. D. A cyber attack that affects employees only, not customers. Answer A. Explanation. The prior act's exclusion in a cyber insurance policy can prevent coverage for any incidents that occurred before the policy's inception. If a cyber event, such as a data breach, happened prior to the start date of the policy, the insurer would likely deny coverage for those events. This exclusion protects insurers from taking on risks that have already occurred before the policy was in effect. Question 28. In a cyber insurance policy, what is the limit of liability referring to? The maximum amount an insurer will pay for damages related to a cyber event. B. The minimum amount the policyholder must pay before coverage kicks in. C. The total value of a company's assets that are covered by the policy. D. The maximum number of incidents covered under the policy. Answer A. Explanation. The limit of liability refers to the maximum amount that the insurer will pay for claims related to a cyber incident or event. This limit can vary depending on the terms of the policy and may apply to each individual incident or as an aggregate for multiple claims during the policy period. It is not related to deductibles. B. Total assets. C. Or the number of incidents. D. Question 29. Which of the following best describes the sublimits ECA cyber insurance policy? A. The amount the policyholder must pay before coverage applies. B. The maximum payout for specific coverages within the overall policy. C. The total sum that the insurer is obligated to pay for any cyber event. D. The period of time during which coverage applies after a cyber event occurs. Answer. B. Explanation. Sublimits ECA cyber insurance policy refer to the maximum payout for specific types of coverage, such as cyber extortion, data breach notification, or business interruption. These sublimits are separate from the overall policy limit and restrict the amount the insurer will pay for certain types of claims, even if the total policy limit has not been exhausted. Question 30. Which of the following actions would NOT typically be covered under cyber insurance policy's data breach coverage? A. Costs for providing credit monitoring to affected individuals. B. Costs for notifying customers about the breach. C. Legal fees for defending the company against a class action lawsuit. D. Costs for preventing a future cyber attack. Answer D. Explanation. Data breach coverage typically covers the costs associated with managing and responding to a breach, such as notification costs, B. Credit monitoring, A. And legal defense fees. C. However, it usually does not cover proactive measures for preventing future cyber attacks. D. Which may be covered under other aspects of the cyber insurance policy or as part of risk management expenses.